Practical accounting. Number 14. Buying stationery in a credit buying cycle. First, a quick reminder of the principles of double entry bookkeeping. There is always 2 entries of every transaction. Product and cash move in and out. The key is to follow the cash. Why? Because cash is blood to every business. Debit is in, recorded as DR, and credit is out, recorded as CR. The accountant will call a supplier a creditor. The movement of stationery and the recording into the books of accounts of a buy in a credit buying cycle are as follows. Buy stationery into the stationery account, recorded as Debit Stationary. Out from the stationery supplier is recorded as Creditors. We have yet to record the flow of cash. The credit buying cycle isn't complete until the cash is paid. The movement of cash and the records in the books of accounts of pay in a credit selling cycle are as follows. Pay cash out from the cash book, recorded as Credit Cash Book. In is recorded to the stationery supplier as Debit Creditors. The credit buying cycle is now complete, as the cash is paid. Remember, the key is to follow the cash. Why? Because cash is blood to every business. To you the customer, and your supplier, cash is blood. This process of recording the movement of product and cash, flowing in opposite directions, in and out, is repeated for all transactions, when purchasing material required to maintain the operations of the business. Such as, for example, advertising, stationery, tools, insurance, telephone, travel, vehicles, and property. You can see whatever you buy, the double entry bookkeeping process is the same. We replace the stock book with the products or service we buy, and follow the products or services and the cash. This is very easy to understand the double entry bookkeeping process. Another business tip from learnaccountingfast.com. Next, is it debit or credit? The puzzle explained.